Hello, I'm Ron Wilson. In this month's news, the federal government has released the terms of reference for the independent review into external dispute resolution and complaint schemes. The Financial Services Council's draft life insurance code of practice has been released for public scrutiny, while the RBA left rates on hold at its September meeting, the final for Governor Glenn Stevens. And in international news, positive US jobs numbers have offered limited support to the Fed's case for raising interest rates, backing up recent comments by Chair Janet Yellen that the likelihood of a rate hike has strengthened in recent months. Michael Pollock has the details.
In early August, the government released the terms of reference for the independent review into the financial system's External Dispute Resolution, or EDR, and complaints framework. The review was initiated as part of the government's response to the financial system inquiry, which called for improvements into the existing framework as well as considering different models for providing effective avenues for resolving disputes. It will examine the three dispute resolution bodies in the financial sector: the Financial Ombudsman Service, the Credit and Investments Ombudsman, and the Superannuation Complaints Tribunal, to investigate whether changes to these bodies are necessary to deliver effective outcomes for Australians in a rapidly changing financial system. The review will have regard to efficiency, equity, complexity, transparency, accountability, comparability of outcomes, and regulatory costs of each of the three bodies. The Financial Services Council released its draft Life Insurance Code of Practice for public consultation during August, with the closing date for submissions passing on the 9th of September. The code is scheduled to commence on the 1st of October 2016, with a transition period running until the 30th of June 2017. FSC life insurer members must notify the FSC of the date on which they transition to the code. The code considers all life insurance services and policy types, including death, TPD, trauma, income protection, funeral insurance, and consumer credit insurance. However, it does not apply to whole of life and endowment insurance, general insurance, health insurance, or annuities and life products, unless any component constitutes a life insurance policy. Australia's economy grew by 0.5% seasonally adjusted in the June quarter, leaving GDP growth over the year to June at 3.3%. This was marginally higher than the revised March quarter growth figure of 3.1%. The ABS noted that weak export performance and a continued fall in resources sector construction was offset by public investment, such as transport infrastructure projects, which contributed 0.7% to June quarter growth. Government consumption rose by 1.9% quarter on quarter, while public investment increased by 15.5% over the same period. Nominal GDP, or income, rose by 1.3%, the largest rise since 2013. Economists considered this to be a good indicator that the income drag from falling commodity prices is coming to an end. The Australian labour market grew by an estimated 26,200 jobs in July, which helped the unemployment rate to edge down to 5.7% from 5.8% in June. This jobs growth continued an improved trend over the 3 months to July, in which job gains averaged almost 19,000 per month, up considerably from an average of just over 8,000 for the 3 months prior. Leading indicators such as job ads and business conditions, as reported in surveys, suggested that the labour market could maintain a moderate pace of growth which would keep the unemployment rate relatively stable over the coming months. On a less positive note, however, the ABS indicated that all employment gains in July were in the part-time category, where 71,600 jobs were created, which offset a drop of 45,400 in full-time positions. The US economy added 151,000 jobs in August, while the unemployment rate held steady at 4.9%. Despite the July figures being revised lower, the average monthly gain over the 3 months to August was still a respectable 232,000 jobs. While these figures were a little below expectations, they were consistent with other data, showing gains in US personal income and spending during July and rising US consumer confidence. Retirees experienced a small increase in their costs of living during the June quarter 2016, according to the ASFA retirement standard. As at June 2016, a couple aged around 65 aiming for a modest retirement required an annual net income of $34,216. while a couple aspiring to a comfortable lifestyle needed to be able to generate $59,160 per annum. Singles wishing to live a comfortable lifestyle needed to spend $43,062 per annum, with each of these figures up 0.4% compared with the previous quarter. Budgets for retirees aged around 85 increased by just 0.1% in the quarter, with a modest lifestyle for a couple equating to $34,598 per annum, and a comfortable lifestyle requiring annual income of $54,460. At its September board meeting, the RBA decided that leaving its monetary policy stance unchanged was consistent with maintaining sustainable economic growth and achieving its inflation target. RBA Governor Glenn Stevens said in the statement from his final board meeting that in Australia, recent data suggests that overall growth is continuing despite a very large decline in business investment, helped by growth in other areas of domestic demand and exports. He added that labour market indicators continue to be somewhat mixed, but suggest continued expansion in employment in the near term. ASIC will not require digital advice providers to comply with additional regulations, according to its recently released Regulatory Guide 255, providing digital financial product advice to retail clients. The regulator considered that current financial services laws and obligations are technology neutral and should apply in the provision of traditional, that is non-digital, and digital financial product advice. ASIC equates robo-advice to digital advice, which it describes under RG 255.1 as the provision of automated financial product advice using algorithms and technology and without the direct involvement of a human advisor. It can comprise general or personal advice and range from advice that is narrow in scope, for example, advice about portfolio construction, to a comprehensive financial plan. ASIC set out an essentially neutral playing field between digital and human advisors, or natural persons, providing examples of the delivery of compliant, scaled and strategic advice in a digital setting, but stopped short of suggesting digital advisors would need to have their delivery methods externally verified.